Hey guys, this week we have a bunch of companies turning in report cards.
What are we waiting for? Hit that like button and let's get right to it.
Starbucks dropped over 4% after hours on Thursday. Revenue missed estimates, but EPS is a small beat. Global same store sales rose by 17%, but missed estimate of 18.3%. Same store sales rose by 22%, missing the estimate of 23.7%.
They are facing the same issues a lot of retailers are facing. The cost of shipping going up and the inflation of material costs. Their plans to solve inflation and retain its margin is to raise prices on your pumpkin spice latte. Mind you, this is not only Starbucks, a lot of companies are facing the same issue.
I better start saving then. Stuff's really going to be more expensive now. But in Starbucks' case, the company still has room for growth. But through raising prices will have a delay effect on their share price. Unlike I think last week or so, when they announced partnership with Amazon, their share price immediately got pulled up.
Yep. Looking at the stock prices level, I like 108 to 112 as a support. Since it broke down Friday, next support level is strong around 100 to 105.
And I'm not expecting too much room to go up above 112. Starbucks will need to show that they can maintain their revenue growth through raising prices, like you mentioned earlier, which will likely be delayed by a couple quarters.
Okay. Didn't you get Starbucks after hour on Thursday?
I did. I pick up a small, very tiny position, but since it slipped the bottom zone of the first support around 108, I got stopped out.
All right. Looking at Apple's dipping Thursday after earning over 3.5%, though revenue is up 29% year over year at 83.36 billion, but missed 84.8 billion's estimate. EPS basically met estimate at $1.24. Can you quickly give us a breakdown of why Apple missed revenue?
Well, let's look. iPhone is 38.9 billion, which missed estimate of 41.5 billion. Other products of 8.79, missing estimate of 9.33 billion. Mac, and I'm expecting my new one, revenue of 9.18 billion, also missing estimate of 9.23 billion. Also note that this number does not include the new MacBook Pro sales from the October 18 announcement.
All right. Timmy C said Apple is facing supply constraints, which is costing the company $6 billion. So in other words, it is not the market isn't buying their products, is that they unable to produce that much to meet the demand.
Looking at forecast, we're going to expect an even bigger impact on next quarter revenue than 6 billion. However, Apple did say that it will be company's largest in terms of revenue ever.
So that's kind of like a vaccine for investor, telling everyone, hey, next quarter expect more hits on ad revenue due to supply issues. Give us lower estimates. And did you know that this is the first time Apple missed the revenue estimates? I didn't.
Damn, I didn't know that either. But it's not like Apple is not meeting estimate due to its quality. It's that they can't physically order more.
For the stock, from 141 to 148 is a good support zone. Obviously, like what you did with Starbucks, the closer to the bottom of the zone, the better.
I like that. And if it breaks below 141, we're expecting support between 134 to 137 area. I will definitely add there. We would like to note that since we don't know when the supply issue is going to be resolved, do not expect it to run too fast from now on.
I agree. Let's move on to Amazon. This is your classic double buzz. I'm slightly more worried about Amazon than Apple. It dropped us over 4% after hours on Thursday.
Yeah, revenue of 110.8 billion missing 111.6 billion estimate and EPS of 6.12 badly missing the estimate of almost 9. Operating income of 4.9 billion, which is a lot less than last year, Q3 of 2020 of 6.2 billion.
Forecast of 130 to 140 billions also not meeting the estimate of 142 billions. The forecasted operating profit for next quarter is between break even and 3 billion. It's not even half of estimates of 7.7 billion.
That's not looking good, especially with Christmas coming up. We are looking at critical level between 3100 to 3200. Amazon needs to reclaim the profit growth. Since its PE is pretty high right now, like we explained before, there are only two ways for a stock to get to reasonable value, aka PE. First is growth in earnings, second is drop in share price. So the forecast is literally telling you, hey, we're not going to make it at least for the next quarter.
So don't be aggressive on Amazon. If Amazon can sideways between 3,200 to 3,400, that would be the best case of scenario.
And let's be patient. This earnings season showed us that even the strongest can have bad quarters. That could be because of supply issue, inflation, or increasing wages and costs. We just need to be logical.
Absolutely. Let's also talk about Facebook. Facebook on Tuesday announced that it has changed its company name to Meta, and its stock price has popped 3.6%. The company is pivoting from its social media focus and is developing plans to enter the metaverse. What exactly is a metaverse?
The metaverse is a virtual environment where people can interact with each other and their surroundings. In case you're unfamiliar, Roblox is a perfect example. It already operates a metaverse platform with millions of daily active users. Now Facebook, sorry, I meant Meta joined the game. This is a pretty bad news for Roblox.
To a certain degree, yes, but Roblox is not necessarily doomed. The company has attracted 48.2 million daily active users, up 32% from the same time last year, and has a established platform. I see kids nowadays are all over the place playing Roblox on their iPad. The company's users are currently targeting younger age audience, which is with over 50% of its user is under the age of 13.
That's true. My friends would just let their kids play Roblox on their iPad when we're out for dinner so they don't cry and bother us. In terms of competition, Facebook has 3 billion monthly active users across its family of apps. It should be quite easy to nudge their existing users to try out their new metaverse platform whenever it's ready.
That's a good point. But, and this is a big but, with all the stuff going on with Facebook, many parents could be hesitant to allow their kids to join a Facebook created metaverse. It might be toxic too, you know.
Well, I think that's another topic for another day. In addition to Facebook's ability to obtain users, the company is planning on investing billions of dollars in its transition plan, and they just recently announced to hire roughly 10,000 people in Europe to create the metaverse. So this might come sooner than we expect.
I never underestimate how big is Zuckerberg's bank account, but I do believe this is not entirely a bad news for Roblox. Facebook's entry into the metaverse space could potentially introduce to billions of people worldwide who have never heard of or experienced a metaverse. And for sure, Facebook will likely increase the growth rate of metaverse industry. We know for sure Facebook will take a good chunk of this young market, but if the industry gets bigger, Roblox gets a piece of pie proportionally.
That's very true. These two have massive long term growth potential in this young industry. Roblox is currently trading in the sub 80s. With its current small with its recent small rally, the stock hit 85 and is now sideways consolidating. We might be able to open a position around 80, and hopefully, we can take out upper resistance around 90 to potentially test the prior all time high. Also, be on the lookout. The company's earnings is coming up November 8th.
Thanks for pointing that out. If you are interested in Facebook, well, Meta, the stock is currently trading 20% off the all time high. I'm hoping to scale in some share around in low 300s. If things don't go as planned, I'm ready to double down around 260 to 280.
Well, Facebook is still struggling to find a way to navigate Apple's new privacy restriction, and they're still dealing with a bunch of criticism and scrutiny from regulators. And yet, these concerns are pretty much already reflected in Facebook's current stock price. Facebook themselves apparently think that the stock is at a fair value, and the company increased its share repurchase program by 50 billion.
No doubt, this might be a great buying opportunity. Now that Facebook is developing plans to enter the metaverse, will they slowly drift off from their social media game? Please comment below and let us know what you think.
No, I don't think so because it's their bread and butter. But let's also take a look at the overall market. Historically speaking, October is usually a volatile one. This year is slightly different. After a 5% small correction in September, markets were up nicely this month, with the S&P 500 bouncing back roughly by 6.6%. This is mainly driven by some of the earnings from both growth and value sectors, despite some big names like Apple and Amazon falling short this earnings.
Well, it seems like more of a treat than tricks to investors this year. Also, VIX has declined to around 16. That's pretty much the pre-pandemic level.
Yeah, I ordered VIX Thursday and Friday, same orders, but didn't hit unfortunately. The market is looking strong and stable, but as we head towards the end of the year and into 2022, we cannot ignore that inflation has remained above the Fed's 2% target now for 6 months. And also the growing concern in the current monetary policy as well as rate hikes.
Absolutely. All major indices held up pretty nicely and closed the week green despite Amazon and Apple's disappointed earning.
I also thought that Nasdaq would take a hit, but I guess not. Looking into next week, the next support is around 15,660, but very likely will continue higher judging from Friday's close.
Same story with the S&P 500. If we do get a pullback, the stock prices will likely react to a support area around 4,530.